Hi, I'm Love. I started trading around end of February, beginning of March, and like most people, I didn't know what I was doing. I was getting most of my information from Wall Street Bets. I definitely was chasing after the meme stocks and getting torn up in the market. Trying to find more information, I stumbled onto Webull. That's where I found Matt, and fortunately, his rules, and it's been storybook ever since then. I don't trade for a living. I am a professor, actually, and so I spend a lot of my time doing research, and I can't look at the market all the time, every day. So my trading strategy has to be pretty set. When I first get up in the morning, I know what I'm going to do. I put in my bids, and I have to leave it to that.
You say you're a professor. Professor of what?
I teach accounting. Specifically, I teach auditing to undergraduate students. So they have no work experience. They are about to graduate, go onto the market, and hopefully find their careers. So that's what I do for a living.
What is a typical day of trading for you?
So actually, my day actually starts at night. I spend a lot of time on the weekends researching stocks that I'm interested in or that I had on my watch list. I see other people put them on their watch list, and then I start to get intrigued. That's when I start to look at charts. I look at Twitter comments, all these things. Now, I know you don't trust all that stuff, right? So, but I do take it in. And then I start to look at where I think the stock might go and put options on my watch list. And all of that is done at night, though. All of it's done at night after trading or either on the weekends, so that when I actually start trading, like in the morning, I put in my bids, what I want it to go to, and I leave it alone. So even if my stock drops like 50-40% in the day and I get an alert about it, I buy more because there's not even a doubt to me that I'm interested in it because I've already done all my due diligence at first. And so to me, it's just a discount. Unless there's news to the contrary, I stick to the plan.
So basically, you've done your research, you did your due diligence, and you trust that you got the stock direction correct.
Mm-hmm.
Do you admit, like, okay, maybe I messed up? Do you have a stop loss? Is it mental? Is it, hard stop loss? What is it?
So for me, it's mental reality check when I decide whether or not I'm going to stick with a stock or not. Like today, for example, I had a option that was completely beaten up. I think it's just steady been going down. I want to say like every day 20%. Today it was down 80 more percent and expired tomorrow. Now I was thinking to myself, should I sell it for $30 and I paid $200 for it, or should I keep it? And I just thought to myself, well, I bought it for a reason. I really did think it was going to hit this target. And if it doesn't, I'll learn, I'll adjust from it. But I'm going to keep it there and give myself that one last day to be right.
That's pretty interesting. That's actually a very good way to see it. I mean, you're down so much right now anyway, that, $30 more is not going to really save you or, kill you right there.
Right.
And you actually got into it for a reason. That's the main thing. You actually got into it for a reason, because what I see, and I don't know if you might agree, like a lot of people just want to have an alert given to them. Like, okay, I'm buying this, and they get in and they have no clue what that stock is. What it's going through, what the company does. And they just get in, and sometimes because they don't have that conviction like the one that you had, because you actually studied that stock and you were like, okay, this is down, but I'm almost positive that it should go up because of all the research I did, so I'm going to stick to it. Many people that just jump on alerts will be like, Jesus, I paid 200, I'm down 100, I'm getting out of this damn thing, and then that's because they didn't really know anything about the stock. Would you agree with that?
I 100% agree. And I think there's several things that people have to think about when it comes to that. One, you have to know the stock and why you're getting into it. Because, for instance, whenever Matt gives an alert, I put it on my watch list. And I study it until I have a reason that I want to get into it. knowing that, of course, it's a big bonus that he might be getting into it too. But I have to be sure on my own, because number two is you can't depend on somebody else for when you get out, right? You can't wait for somebody to tell you when to get out. You have to know that. You have to know what profit is acceptable to you. You have to know when to get. You can't wait because the market changes too little. So you have to make that decision. And whenever you follow somebody else, you tend to have to follow them out. And then three, if you know a stock, if you know why you got into it, right, you're willing to accept the risk a little bit easier than it is if you follow somebody else. So a lot of people wait for alerts, and I think they're fantastic. But even then, I think that you should know it. You should know it. And so maybe
that know
that
what you're getting into. I mean, that's for sure.
You might miss the very best entry, but if you study it, then there'll be other ones, right?
They always come back. I mean, it's no, that's awesome. I always had that inside of me, and I wanted to get it out with somebody. I'm like, do you agree with this? Because I feel that you hit it like right on the head. You bought it at 200. It was at 30, and you kept on holding it, not because you were like, whatever, but you kept on holding it because you got into it for a reason. You know? So that's fantastic. I love that.
I think that I do you feel bad because when other people give tips or give like alerts, like they're really good, right? And I want to jump on them, but I also know that I need to know, right? And so sometimes I might miss when they do it, but if I wait until I'm ready to get into it, then I know for sure what my mental stop loss is. Like, okay, I know if it doesn't go to here by this date, then it probably isn't going to make it. Then I'll let it go. But if you're like, today's market was extremely rocky, and there's nothing to suggest that it's going to get less violent or volatile later. Yeah. So for sure, you have to know when you want to sell, what your targets are, and that's difficult. Nobody really knows, like, okay, this is the good stop. Profit is the good one. That's when
exactly. When it's green, take it.
Like for sure.
You know, especially in this market, like you said, if it's green, take it, because you'll feel horrible when you come back and look at it, and maybe you're expecting 10% more, and that 10% cost you like 50% to go against you, and now you're in the red. So
I had an option today that went from 5 cents to, I think I sold it at $2.50.
Wow.
And then it went up to like 3 something.
Jesus Christ.
Oh no, I missed out. No, I did not.
No, you didn't miss out.
Profit is profit. And that's a form of FOMO too. Like, oh, you think you're leaving so much on the table. So take your profit. Take it. Because
take the profit.
That's
the thing.
Way back down. So I took it, and I'm okay with that.
Fantastic. Tell me the amount that was in that small account this morning.
Yeah, so my small account was struggling. It started at $200, and I was trying to build it up, but it kept steadily going down. And I think this morning I started in it had like $76 in it. It was pretty low. Like I said, the market had been pretty volatile. I was trying to save as much as I could, but it was getting hard to predict. And I had to really start to study the stocks that I put into that. So it was down pretty low. It was at 76 this morning.
And can you tell me where you finished the day at?
So all of that research that I had done before about which stocks and where I thought they were going to go did pay off. That same account this morning that was $76 ended at $793. So it
$800 basically. Oh my God.
It did
in one day.
Yeah, and so it's reassuring to me that whenever I do my due diligence before, even when it gets rocky, to have a reason that I'm in it. Like each one of those things I could have sold and just salvaged the money that I had and tried to wait until the market settled down again, which is a good strategy. It's not a bad one. Like I would do that. But I was confident that I thought that I knew where the market was going. And so I stayed with it. Right. Even with that, the one option that I told you was down to 30 cents. It was in a different account that I paid I think $217 for, actually. That particular stock was Roku. And the option ended up at $1 at close. And then after hours, Roku tanked. So tomorrow it'll definitely be either even or even profitable, right? But I didn't sell it. So I was like, I'm confident that this is going to go down, and these are my reasons why. So I stuck to it.
I think that is the most important thing. I mean, if you're watching this video right now, this is the most important thing. I don't know. I don't care everything else, all the gems that are being dropped. This is the most important thing that you have to get out of this video. You have to know why you're getting into any trade, be it an option, be it crypto, be it, a stock. You have to know why you're doing it. Don't blindly go in, because then you won't know if it's time to get out or not. If it's coming against you and you panic and you get out, it's because basically you didn't have the conviction of knowing why you were getting in there. And that's that. At the end of the day, that's it. So if you get anything out of this video, it's that. From the mouth of love, you have to know why you're getting into the damn trade. Okay.
Yeah, and it's not that I'm team diamond hands because I'm not, right? I don't stay in losing trades. It's just that if I seriously believe something, I will stick with it. I'll give myself a chance to be right. But if I had reason to believe, like for instance, if Peloton got bought out the same day, I would exit. Right? If I had information to the contrary, I will adjust. It's just that if I don't, then I stick with my original research and I stay with it and give myself a chance to be right. Now, notice in both of these stories, I did not average down, right? Because I was only willing to risk so much. Now, would I have liked to have had more than one 5-cent option into Peloton today? Yes. At the time, yesterday when I bought it, I said, this is what I'm willing to risk. That's all you're getting. And I was okay with that.
And it comes down again to the research and knowing how much, you're willing to risk and how and where you want to get out. Have a plan that if this goes south, I'm willing to lose this.
Yes.
And if it goes north, then it's fantastic. So it's a risk, to reward ratio that you were comfortable with. And that's the important thing. But all of this boils down to knowing why you're getting into that trade, doing your due diligence, even if, Elon Musk comes out and tells you, hey, I'm going to buy this, fantastic for you. But I need to know why I would get into that.
And lessons learned from past mistakes. Yeah, I've blown up a number of accounts, right? And each time I leave myself enough to grow back from it, right? Make smart decisions, but always don't over leverage yourself, right? Like I said, yesterday, I was only willing to risk buying that 5-cent option, right? Could I have put 20% of my account or 50% of my account into it? Yes, but in reality, I would have lost that. And so don't over leverage yourself. It's okay not to stick to the original rules. You don't need to average down the same day that you buy something, right? Give yourself a chance to understand where the market's going first, especially in these markets. And so give yourself a chance to be right, do your research, and don't over leverage yourself. And it's easier to build a small account. You can do it.
That's the thing.
Like my first huge blow up, I had over 5 figures in the account and got it down to, I think, 800 and something, and then built that back up to over 52,000, right?
In what time frame was that?
Oh, wow. If I can remember, I think it took 5 to 8 weeks, if I'm not mistaken. That's back when I was heavily invested in MSTR. That was my first do your own due diligence. And I bought a huge call for my account. I can't remember how much I had in it that I built up to, but I know the option cost me $5,200. It was huge, but it went to 22,000. So it did pay off for me. But it was incremental things, right? And there's someone on our platform that tells us all the time, don't overtrade, if you have a huge win, there's no need to get right back into the market. Let that settle in.
Yeah, be happy with it. Go and enjoy. It's like, oh no, but I won right now, and I can win again. And then what you do is you jump back in, and then you give back, what you made, or more, hopefully less. But it happens. And it's just like we think we're on a roll.
It's human, right?
It's not a casino.
Don't let it ride. Like, seriously, be okay with what you have. And tomorrow, take a piece of it and try again. Like,
exactly. I mean, you made money. As long as you're in the green and you keep on going in the green, those numbers are going to keep on compounding, and they're going to get bigger and bigger every time, and with the same amount of risk. So there's no need. I mean, it's easier said than done, but there's no need to go ahead and that strategy that you have, that, you take out that money, you put it aside, and then you start again with a little account. So you're always doing little accounts. Tell me about that.
So that's what I call my main account. My main account, I always start the week with $1,000. So whatever I have at the end of the week, I take out. So the next week, I only start with 1,000, right? And so that teaches me to like focus on incremental gains and profit. And it also teaches me not to over leverage myself, right? It's okay not to see like 5 figures in my account if every week I'm banking, right? One of the problems when we have a lot in our accounts, what we tend to want to do is use it. So if it's not there, I don't use it. The only time I will go over that amount is if I want to buy a larger option, and I know, like maybe I want to buy Tesla. I will allow for a bigger amount, but every week, at the end on Friday, I take out all but $1,000 to start the next week. That's all I'm willing to risk. Like, this market is crazy. That's it. That's all they get.
That's another little gold nugget. If you can't trust yourself that you're going to be listening and not over leveraging and trading, do this. Get out, leave $1,000, $5,000 if that's what you feel comfortable, $100 if that's what you feel comfortable or you have, and then start again. If you made that $1,000, if you made $200, $300, you're making 20-30% in a week. And then you're putting that aside and you just keep on growing that. It's like, it's going to grow.
And I call that my main account, but like, it looks like in a minute, that's going to be the little, it might be the little account in a while. I don't know. I don't know how I'm going to do that. I will have to start a whole new $200 challenge in a second.
People on the platform love those $200 challenges. So, hey, keep on going. Keep on going.
What's key to my challenge is everybody can have their own stocks. Like, I'll tell you what I'm doing, but you don't have to follow me because, I'm risky. I don't, you don't want those problems. But